I found a partner who we bought the first 96 units in Wichita Falls. It's a little heavy lift. So that was my first one. After that, I learned that 96 is a smaller size. So from that point onwards, we doubled the size to 200 units plus.
Can you elaborate on how you found the deal, how you found your partner, how you financed the deal, the capital, just because this is awesome. You go from 11,600 units to your first deal was 96 units.
Yes. So as soon as
podcast, I am your host, Josh Appleman, founder and CEO of Appleman Properties. Today, we're joined with Sridhar Sannidhi, an IT veteran, accomplished real estate investor. Our subject's portfolio include co-sponsoring 3,700 units and investing in 11,000 plus syndications, excel in financial analysis, and enjoy travel, movies, and charity work. We're excited to have you on the show here today. If you could let the listeners know a little bit more about yourself.
Oh, thank you, Josh. Thanks for giving me the opportunity to come on to your podcast. Hi, hello, good morning, good afternoon, at whatever the time you are going to view this podcast. I'm Sridhar Sannidhi. I was in IT sector for almost 30 years before I completely switched over to commercial real estate. I was a cloud architect at Google in my last job. And from there, I completely switched now to commercial real estate. I started this journey 6 years back, and since then I've done like 18 syndications as general partner, and then 11,600 plus units as a passive investor in multifamily. I do ground up developments too. Currently, I'm doing multiple projects and ground up development too.
That's incredible. So what? 11,600 units. How do you stay organized with knowing where all of your investments are at?
I do have a tracker, but I do have a systematic process. Like every month, I try to invest in 1 or 2 deals. That's how I started building up instead of trying to invest all the money at once. I started building up in a systematic way in last 6+ years, and all these passive investments. From investment point of view, I have some parameters where I see if the deal qualifies, then I further analyze and then I take the decision to invest in. So from geographic point of view, median household income point of view, the property size point of view, and the deal sponsor point of view, I have certain parameters that I go through, and then based on that completion and based on that analysis, I do invest.
What is your median household income parameter for the area?
And typically, I look for $60,000 median household income for a passive investment.
Yeah. So these are all B class.
B plus, B plus, A minus, yeah.
And then as far as the markets go, what markets do you see as being solid to invest in?
All Sunbelt states. Basically investor friendly states, in other words. Yeah.
Okay. All right. Got it. So red states and then Sunbelt. So I'm getting mixed signals on Sunbelt states. There's a lot of areas that are pulling back on rent growth, and you'll see some retractions. What's your feeling on that?
I look for the cities where minimum 100,000 population and job growth at minimum 1.5% in past 5 years. So on average. So those are the cities at minimum I look for. Yes, there is some challenges, like some cities which have experienced tremendous growth in a very short period of time. They are pulling back. So I have a limited exposure there, but I mean, my investments are doing good in that, even in that market, because we did not go crazy on underwriting and we went with the normal underwriting. So yeah, we are not feeling any stress there. So.
Yeah, it sounds like you buy for cash flow, not appreciation, correct?
Yes, that's correct.
So let's rewind for the beginning real estate investors that want to get into multifamily. How did you get started, and then what size of the property, and how did you what path led you to where you're at now?
Yeah, that's a good question. When you're in a corporate job, every year during the budget time, the people have attention like, okay, will my job stay or some layoff will come or type of thing when the economy is not doing so great. So that kind of uncertainty, I felt that 7-8 years back, when few of my colleagues were laid off, I said I should have a plan B and with full force. It's not like that. Okay, I will do something tomorrow type of thing. Then immediately I started this plan, like looked into starting my own IT company and all that. Then I felt that I need other support in doing so because my skill set alone won't be sufficient. So when I started teaming up, people are not sticking to the company, then I felt that I should go into the real estate one where I can buy my own properties and then at least build a portfolio that will create the passive income. And from there, I can have that relief or financial freedom. That was my thought process. And in that process, I started looking at the single family homes and our small apartment townhomes type of things. I tried for 1.5 year to get one, but everywhere I went, people outbid me. The market was so hot at that time, and markets, the sub-markets where I was focusing on were very demanding ones. So, I mean, everybody wants to buy properties in those sub-markets. So then after 1.5 year, I gave up that effort and I said I should go big and bold rather than going small and then looking for some other alternatives. So with that, I started looking at 100+ units. I found a partner who we bought the first 96 units in Wichita Falls. It's a little heavy lift. So that was my first one. After that, I learned that 96 is a smaller size. So from that point onwards, we doubled the size to 200 units plus.
So you went from looking to buy a house to not buying a house at all, and then just solely focusing not on small multifamily, but multifamily that was almost 100 units.
Yes.
So your first purchase in real estate was a little under 100 units, correct?
Yes, 96 units. Yes.
Can you elaborate on how you found the deal, how you found your partner, how you financed the deal, the capital? Just because this is awesome. You go from 11,600 units to your first deal was 96 units.
Yes. So as soon as I decided that I have to be in the real estate segment, obviously I need to do some education in that. So I started going to all the meetups, wherever get-togethers are there, something related to real estate. I started attending. In that process, I went to one of the IRA custodians meetup, and then I met a couple of people there, and I felt they are also serious into this business. So I partnered with two of them, and then that's how we pulled up the first 96 units. Since that one involves a little heavy lift, we thought that that's a perfect one to learn more. Even if we do mistakes, we can take the bullet, that kind of thing. But financially, since I worked in industry for 30 years, and so are my friends. So we thought that it won't go wrong that much. Even if it goes wrong, then we can take the bullet. That was the thought process. It went in, and I was not sure I could raise the funds and all, even though it is a syndication. So that was my second challenge. So I reached out to 20 close friends to see if they're willing to join me in such a syndication and all. To my surprise, all of them said yes, and they came in. So I raised maximum amount in that deal, and then we closed the deal.
How much equity did you raise? Because that's your first raise, your first syndication, and
it's $1.2 million raise.
1.2.
So yeah, majority of it I raised it. Yeah.
And they believed in you. They know your track record on a professional level, and they knew that
Yes.
that you're not going to go and get into anything that's going to negatively impact them. So that's your trust was built already on performance.
Yes, that is correct. Yeah, based on my professional record, they joined me on this personal endeavor too. Yeah.
What kind of debt did you take out on this first property?
So we did not do the full cycle yet, but we fixed whatever is needed. Like there were like 36 units were gutted down when we took the property. Now we made all those 36 online, and it is stabilized property now. But we are looking to exit that property now. So I mean, investors are going to get the returns exceeding their expectations.
That's music to their ears, I'm sure. What was the time horizon on that first deal?
It's close to 4.5 years now.
4.5. And it's been kicking off cash flow ever since, and you get your depreciation, your debt pay down, and
Depreciation and all is good, but cash flow, we had some hiccup. Basically, not exactly the hiccup, but we wanted to change the course. Initially, whatever business plan we had, we achieved that. And then we realized that there would be more value if we can do some additional things like the property has a chiller. So then we felt that if we convert all those chillers to individual HVAC units, right, then that will fetch more value. So when we did that, then we had to take the cash from operations. So because of that, it's basically improving the property from the operations rather than distributing to the investors. That in turn resulted in more value to the property.
Yeah, and it's you're going to make it up one way or the other. It's just
Yes.
not that's actually, and it makes the property better for the next group that's going to come in, and it's going to make it more marketable, more valuable,
Yes.
and a better property overall. I totally agree.
Yeah.
So we go from 96 units. What was the point where this thing's going to start picking up steam and we're going to start going after a lot of deals? I know you've created infrastructure, but tell us the next move, because it was you and a couple of partners.
Yes. So obviously in syndications, there are several factors when you build up the teams to buy the properties. Typically, a couple of partners should be from the local area. Let's say if I buy property in Houston, I add one or two local partners from Houston so that they will be boots on the ground and type of scenario. So the first thing is from 96 units, I felt that 96 is good, but for economies of scale, I felt that 200 units is the beginning ideal spot. So from that point onwards, we started looking at 200 units. And also the fundraise was very good for me. It gave me a very big confidence. Like when I called people, like literally everybody said yes. And we filled in a very short period of time for that one. And the second one also, when I went for 196 unit, that one also I was able to raise more than what I thought I could raise. So that kind of gave me motivation to push myself more and more and more. So like that, I started doing more deals.
Yeah. So at this point, you're using third-party property management. You're establishing relationships, seeing what happens, and tell us the next move. You're adding to your team. You're seeing there's probably some new problems internally, which is a good thing. If you have new problems, you got to solve those new problems with scale, adding people. So tell us the next move.
Yeah, sure. So once I started adding more properties to my portfolio after third or fourth, then obviously the amount of work we need to do and amount of work that needs to be handled on a daily basis went up. So slowly I started building up virtual assistant team. Now I have 10-member virtual assistant team to do various back office functions. So from from 1 or 2 transactions per year. Now I started increasing the number of transactions per year. Last year I did 6 transactions, 6 purchases. So despite we're in the middle of COVID, I did not slow down. I started doing the same thing, and this year also I'm expecting to close 6 transactions. So,
and those are all in Sunbelt.
Yes, all in Sunbelt, predominantly in Texas markets. Yeah.
And then your team is responsible, I'm assuming, for asset management, making sure property management is pushing property performance.
The third-party property management company is managing all the properties, but our team is like asset managers. So we do check on a daily basis for certain KPIs, and a weekly basis certain KPIs, monthly some KPIs. Like I have given them standard operating procedures to come up with reports on various frequencies. For example, on a daily basis, we go and check every single property's website, whether it is up or down. Yes, the property managers say that it is up, but we want to cross-check without their knowledge, saying that we are doing that. And occasionally we call the number and say whether the phones are working or not. So we do those validations on a daily basis. And second thing is, on a weekly basis, we see MMRs, and then we see how the traffic in each property and all that. So we get MMRs from the property management company, but we do our own MMR analysis on a weekly basis. MMR, those who don't know the word, like MMR is Monday morning report to see the status of each property. That we do on a weekly basis and monthly basis, financial audit review, budget analysis, like how we are doing against the budget and all that. We do all that. So there are so many learnings in the process. Yes, we do all this systematically. So that's how we are able to scale up quickly and bring up more deals.
Got it. What are some tools that you're using to help manage your portfolio and then even underwriting your deals?
So underwriting, I used a few underwriting models. There are some we bought it from the open market. I'm part of one of the mentoring programs, so they also have underwriting models. So depending on the deal type, I use different underwriting models. And then other tools wise, mostly we use ClickUp for tracking the activity. Is like a project management software style, like we're assigning the tasks to individual VAs and all. So ClickUp
is Asana here.
Yeah,
we use Asana here. It's the same setup. Asana, ClickUp.
Yeah, I used to use Asana, but it became expensive and we have a bigger team. So I said, okay, let me start working on ClickUp, because ClickUp has a dashboard building capability too. So that's why I switched to ClickUp. And also we use Google Sheets extensively, because it's the one sheet can be shared across team members and see what's going on. Most of the processes are built around Google Sheets and Google Docs. And now I'm working on next level using Google Cloud. So to build dynamic dashboards that I can share with the investors.
Yeah, like some CFO dashboards that just show like real-time analytics. And that's huge. Once you can plug into that kind of data and have your market rate rent versus what you're effective, and then so you can really just dial in the performance of the property. And I know that there's some really good Microsoft tools out there. Like it's just getting it all to plug it using the APIs and letting systems talk to each other.
Yeah, I tried for API route, and the amount of money they are asking for the API calls was like insane for my small portfolio. Then I felt that, okay, let me build my own and then show it. It's much cheaper to do in another way.
They'll paper cut you to death on all the fees and call API calls for sure. Very cool. So, and you're doing development. So tell us a little bit about land development. I know the process personally, and it's a grueling process, but I'll get your take on it.
Sure. So, last year, the market became very competitive because of the low interest rates. At that point, I felt that the pricing doesn't make sense on some of the properties in some areas. Then I looked into the new builds, and then I realized that if I do the construction, there is a wide margin. So why not I take that route and then start building the properties by myself and take advantage of that gap. So for Class A, there was almost like a 3 cap rate people were buying. Whereas if I build it, I can build it like a 5 or 6 cap up to stabilization, right? So that's a wide margin. I felt, okay, let me jump in and then start doing it. So I did the first deal in 2 years back that we are finishing it off. It's a 306 unit complex, and followed by another 330. I started like that. Obviously, the process is a little gruesome. You need to find out the land, go through the entitlement process, and get the plans approved, and then get permits, and then build it and assemble the team like GCs and all that, and then get the loan and build it. That's a lengthy process. So what we do is like we do in 2 phases. One, to acquire the land and get the entitlement. Up to that phase is 1. So that time we borrow a limited amount of money just to buy the land. And the second phase, once everything is done, all the entitlements are done, then we get, when the project is ready to get the permits, at that point, we take additional funding from the investors, and we roll in the investors that are from phase 1 into phase 2, and then go from the vertical construction and stabilization after that.
Have you all explored low-income housing tax credits yet?
Housing tax credits, typically the new builds we are doing in a high income area, so they're not suitable. But for the existing properties, we have one LISTC property in our portfolio, and then we are going through PFC, HFC process on a couple of properties, so to take that low income thing. We also have another property that gave us the tax credit or tax advantage for a long period of time.
Yeah, on new developments, they make it pretty enticing to take it down that route. And as far as getting the property and selling the tax credits to the banks for your equity,
Yep.
but it just takes it takes time. Everything takes extraordinary amount of time on developing.
Yep, agreed. So we are looking for those projects too, but at the moment we went with the traditional construction areas. Like we build properties where the median household income is 90,000 or more. So it's like A plus areas.
Got it. Very nice. So what's next on the path? Where do you see this thing going in the next 10 years per se?
So housing, I see there will be shortage, and also people's way of looking housing changed a little bit, in my opinion. In previous generations, they were more focused on buying a house, owning a house, and all that. But the younger generation are like, okay, let me stay in this city for 3-4 years, enjoy the city, and then move to a different city, enjoy life there type of thinking has come in my opinion. So that gave a lot of boost for this multifamily apart complexes. So that there's more demand for multifamily than single family, in my opinion, and the rate of growth, I mean to say. So that definitely gives a lot of advantage for multifamily instead. So there is a massive shortage of multifamily units in every city, and the growth in southern states is phenomenal for past 10 years. I think it will continue for maybe another 5 to 10 years. Maybe it may slow down in some areas because of the affordability reasons. In other areas, definitely it will go up.
How big of a portfolio are you wanting to have?
So eventually I want to build 10,000 units of my own. So rather than syndications. So there's a long-term project, like slowly from now onwards, I started building up. So that is another reason to branch out to construction. So if I do build, I can hold that property for a long period of time with minimal maintenance. So
essentially hold it forever.
Yep.
I mean, you're buying it's brand new. So 20 years from now, it's only 20 years old versus 80 years old in some cases. I totally agree. It's just the time it takes to get things going through on developments makes it so discouraging. But very cool. What are some masterminds, some real estate events, some things that a beginning real estate investor can go and look for that you would recommend?
So in multifamily, there are different approaches people to take. Like some people get afraid to look at the bigger numbers, like 200, 300 unit type of thing. For them, there is some syndications like Jake and Gino type of events, right? They go for a small to mid-size unit, like 16 to 100 unit type. Mostly they focus on, I believe. So those are good. Rod Khleif is another one, they do it. For larger one, I think Brad Shamrock is there, and then Joe Fairless is there, and there's so many of them. So for other mastermind events, I would say I was part of Brad's mastermind event. Now people are joining Tony Robbins mastermind just to give the overall business strategy and motivational type of things. There's so many of them. Again, it depends on individuals' need, like which area they want help with or connection with. So that's what they go for. So this year, I'm cooling off on the mastermind because I'm spending too much time on that. So I'm not focusing on the growth. So I want to set up a bigger team in US also now. I'm planning to hire a whole bunch of people. So that's why I didn't focus much on mastermind event, but I'm attending all the real estate events, whatever is possible.
would you say it definitely played an integral part in you getting to 11,600 units, masterminds, and relationships?
100%.
Yeah.
100% I agree. So if I do it by myself, I would not have reached to that level that fast.
Yeah.
Obviously, these masterminds and then other events, real estate events, helped me to reach to that levels fast. So
Especially when you start doing deals and people start taking notice. Now they want to, you're building a fire. You know, how big that campfire gets is up to you, and how many people you invite over to your fire is up to you too. So it's
that's true. That's true. Yeah.
it's a balance. Everything's a balance, finding the equal point. Very cool. So if somebody would like to reach out to you, get a hold of you and find out more about yourself or invest with you, how can they reach out to you?
Yeah, they can check me on my website, www.growwealth2retire.com. Growwealth2retire.com is my website. Or they can use my first name, Sridhar, at growwealth2retire.com. Growwealth2retire.com. Yeah.
And then one more quick question: what books would you recommend somebody to listen to or to read to level up?
So I don't read a lot of books on this thing, to be honest with you. So people continuously read it. But the thing I realized is one has to act on it and then try to see mitigation of risk at the early stage. Definitely reading books will help in giving different perspectives. Couple of books I would personally say is like a Rich Dad Poor Dad book. Like most of people claim that changed their life. Even I read that book. I felt very impressive. And then Think and Grow Rich is a Napoleon book that also influenced me a little bit. So the thought process, basically, once we have the mindset, then we can run. Now, now I wanted to read more books. To be honest with you, I did build all this portfolio while working full time. Until this January, I had full-time job also.
Oh, wow.
People think that they cannot do it. Just to let them know that, hey, it's all your mindset. If you start working on, you can do this massive portfolio while working full time.
That's incredible. I did not know that. That's Sridhar, you're truly a inspiration, and to have 11,600 units on a full-time job and doing events, masterminds, creating relationships is that is true grit, and it makes you truly a real estate hustler. Definitely appreciate you having on the show today, and definitely look forward to following you and seeing how big you grow it.
Sure, and yeah, definitely I wanted to put more effort into this business and start growing, and now I'm branching into other verticals within the real estate segment. Hope to see more growth there too. So, and also really thankful to you to give me this opportunity on this podcast to connect with all the listeners and viewers. Yeah,
absolutely. Again, I appreciate your time. I will certainly be looking for your activities out there, and we'll talk soon.
Sure.
All right. Thank you.